Do we clap or?
No.
Clap.
You want to clap if you can. Yeah.
Okay, that's so childish.
Fast forward to today, we're 8-9 exchanges doing something like 60 billion in notional traded volume a month, 21,000 settlements a month, and it's all run 24/7.
You know, how much of an issue is it in the crypto space that there seems to be these repeated blow-ups?
Clients can log in and they can see the holdings, they can verify them on chain. You know, the beauty of blockchain is that it's not just a number on a website. They can go and independently verify that out externally.
From your seat, how important are institutions to the future of crypto?
To coin a rather cheesy phrase, it's sort of a rising tide lifts all ships.
Any innovations that you're watching over the next sort of 5 to 10 years?
Tokenization of real world assets.
But you don't need to hedge. Do you know why, Ken?
Why is that?
Because one Bitcoin is one Bitcoin.
Unless you have 0.32 Bitcoin.
Had.
The security issues, they get hacked and then people lose their stuff.
Personally, I wouldn't keep my assets on an exchange.
Price target for this cycle, if you're willing to put your neck on the line.
I am willing to put my neck on the line.
Wow.
I comfortably see it being...
Ladies and gentlemen, welcome back to episode number 14 of the Mergers podcast. I'm particularly excited today because, unlike Ken, we actually have someone who's capable of speaking the Queen's English, but he's also from Copper, sort of, I would say, one of the UK's best crypto companies. Charlie, how are you doing?
Yeah, very well, thank you. Thank you very much, Rory and Ken, for having me on.
Yeah, of course, man.
It's always nice to get a shot in at Ken, pretty much right off the bat, just straight in.
Don't worry, it's a long podcast.
All right. So a bit of background. Obviously, we all know Ken by now, but Charlie is one of sort of 7 relationship managers at Copper, managing 500 institutional clients, reports to the head of revenue. And Copper, for those that don't know, very famous MMC-backed, sort of VC-backed, about £3 billion crypto firm that sort of produces software and stuff for institutional clients, so Goldman and hedge funds, to sort of trade crypto in a sort of compliant and competent way, I guess.
Yeah.
But I'll let you explain some more because that's roughly, this is your role at the end of the day, not mine.
No, very kind. I mean, you pretty much hit the nail on the head, right? So Copper sort of primarily set themselves up as a digital asset custodian. We were spawned out of a guy from Dolphin, our founder, Dimitri, who basically was coming across digital assets more often, was really struggling to try and find a way to hold them. So basically built from the ground up a battle-tested sort of custody offering. That then sort of kind of got institutionalized as more and more clients came on. It started with the crypto natives, so your purely crypto hedge funds, and then it spawned to sort of a wider adoption of your TradFi guys who basically needed a custody offering that was similar to TradFi. We then looked to take that one step further. And bearing in mind that we only deal with institutional clients that were kind of new to the crypto space, they have a really strong focus on any way that they can mitigate risk. And what does that look like in crypto? Well, it's counterparty risk. Look at the likes of the unfortunate sort of FTX scenarios. A lot of people unfortunately got burnt, and that kind of unfortunately prevented some institutions. But Copper basically set about and coming up with a product offering that combated that. Look where we are today. We've got, when I first joined, we were 3 or 4 exchanges on this product called ClearLoop, which I'm sure we'll go into a little bit more detail later on. Fast forward to today, we're 8-9 exchanges doing something like 60 billion in notional traded volume a month, 21,000 settlements a month, and it's all run 24/7 with frequent settlement cycles, flushing out risk. And really that sort of, we are kind of our presence really to that product.
Yeah. And I guess you mentioned too, like from a headcount perspective, like how early in were you and where does it, it's always impressive to see the assets under management, but how early and how much change have you seen?
It's been vast. So when I joined, I was, I think, employee number 27, give or take. We're now 320 last time I checked, and there's been a lot of change. Unfortunately, there's been some familiar faces come and go, but the space. Yeah. Unfortunately, it's just kind of part of the way. But a lot of growth, and the role has naturally developed as time's gone on. When you're a small dynamic business, you have to be kind of jack of all trades and scrapping and sort of getting stuck in. Now we're starting to sort of build out more robust processes, teams, etc.
Yeah, I was going to say that must be, you're not only in a growing industry, but probably the fastest growing industry.
Yeah.
So your company and industry are growing sort of breakneck pace at the same time.
Yeah, absolutely. I mean, not just the crypto side, but we're seeing sort of the institutional guys, the companies that you know by name, who are getting more involved in it, and it's just becoming more of a physical presence that we all know.
Like one of those small hedge funds that you know about.
Oh yeah, like who's that? Who's that guy? A really niche hedge fund called.
I think it was Man Group or something like that.
Oh, Man Group. Yeah, no, he's changed. He's a member on our group. He's
like
somewhere smaller
Centurion,
now.
I think.
No, a decade. No, Millennium. He's a Millennium.
right.
I don't know if anyone will have heard of Millennium.
Probably not. Small.
Sorry, shout out Andrew, by the way. We love you. It's just funny. So, okay, let's go a step back because I'm quite keen to learn more about like how copper works because obviously it has a fantastic reputation. I'm not being too sycophantic, hopefully. For those that don't know, the way sort of traditional banking or like TradFi works is there's a big focus on how you custody assets, partly because of all the things that have gone wrong. So effectively, I'm the private banker. Ken gives me...
Well, what does it mean to custody assets?
Like hold. So the way... It's a good point. The way it works is Ken gives me 100 million to invest. I obviously go invest them. But then Charlie would be the third party in this. He'd be the custodian. And the idea there is that I don't hold the assets that Ken has given me if I'm also taking risk. So you have someone separate. You say, what does it mean to custody something? It means you're a completely separate entity and your job is just to hold assets. So you don't do what's called like commingling, right?
Yeah, correct.
And so it'd be interesting, given how much blow up there's been in FTX when they effectively weren't sort of following that same procedure, sort of how ClearLoop solves this, but also, how much of an issue is it in the crypto space that there seems to be these repeated blow-ups where, no one really knows at the end of the day who owns what or where the assets are.
Yeah, that's a really good question. I think it comes down to the core of it is, have you got segregated custody or is it sort of in an omnibus or commingled setup? Now, there's no sort of one that kind of champions others because, the product offerings off the back of those varies quite drastically. But, omnibus normally scares the living bejeebers out of most people because they immediately jump to rehypothecation, which is ultimately kind of where a lot of the downfalls.
Which is what? I'm sorry.
Rehypothecation is the idea, we see it in sort of fractional banking. It's sort of the equivalent of, okay, well, you deposit one Bitcoin. I'm then going to lend that one Bitcoin out. As far as you're concerned, excuse me, you've still got that Bitcoin. But when you want to go and withdraw it, it's elsewhere. Right. And if I can't recall that quick enough, then we're in a slight problem. And of course, the number of numerations that they go through and the number of hops is that they could have lent it out multiple times.
Right.
Purely just to drive sort of a wider ecosystem or volumes. But, a lot of the sort of more institutional focused guys are going down the routes of sort of creating transparency dashboards, where clients can log in and they can see the holdings, they can verify them on chain. The beauty of blockchain is that it's not just a number on a website. They can go and independently verify that out externally. And so we are seeing a bit of a shift, but it's taking a bit of time. But yeah, we very much sort of see the role as a custodian is very much mirrors TradFi. It's sort of the segregation of duties. Our job there is to look after the assets. The investment manager is there to trade them. That's
Quite funny that you say, like, obviously audit it on chain because it feels like all of banking exists on an Excel spreadsheet with some like very tedious formulas that are just creaking, holding everything together. And then you've got this new technology which should be perfect. And like I say, you had what was it? BlockFi was one of the ones that blew up because it just turns out that they had one Bitcoin and they were giving a yield on it, and it just got lent out like 50 times. And obviously, along the chain, they'd lost track of basically who had what or couldn't reclaim it, and that's why everyone lost a load of money. But it'd be interesting to know from ClearLoop's standpoint, because this ClearLoop is probably the number one sort of product offering in this space.
Yeah, very
So
much so.
how do you solve it, and how did you convince the institutions that it was safe and they could get in and start running strategies in crypto?
Yeah. So primarily started with we took a lot of the infrastructure based off what the TradFi guys already knew and liked. So we're thinking about sort of insolvency remote vehicles, UK trust law, a lot of these things and structures people are familiar with. What that ultimately means is that in the ClearLoop construct, assets that sit within custody at Copper wouldn't form part of Copper's estate. So if Copper were to no longer exist or were to go insolvent, those assets are protected and ring-fenced. Equally, those assets sit very much aside from assets that are purely in custody or Copper's own proprietary assets. They are very much there for the trading activities. When you can sort of demonstrate quite a robust legal framework and also sort of transparency part, suddenly you start to see that the TradFi guys get a little bit more comfortable with the idea of, we're familiar, it's comfortable. And that's been half the battle in the industry as a whole is, you've got to play off what people know. People don't like change.
Right.
So, we built a framework that is very much on the crypto angle, and allows clients to gain access to crypto centralized exchanges, but it's held in a very secure and sort of legal, robust framework that's been around for quite a long time.
So something that if you're, compliance or risk manager at Millennium, and you're looking to get into the crypto space, you understand because it's basically a mirror of what a traditional bank offers.
Correct. I mean, I think it goes to one level deeper and quite considerably. When you look at TradFi and sort of the idea of settling trades, where of course it's come a long way. T+1 is now considered an exceptionally fast time to settle trades, but not in the crypto space. When you look at what ClearLoop can do, we have exchanges that are settling trades and thus flushing out risk every hour. So those trades are being settled between the centralized exchanges and the client's custody accounts at Copper every hour. So you're completely minimizing your risk to that exchange every hour. Of course, there are certain strategies that lend their hand better to that. If you're doing a perps or an options trade, your exposure to those venues is long, much longer and it's greater. So you want to minimize that as much as you can. If you're doing spot trades and you're just going in and out of certain currencies, as long as they can deliver the assets on time and in a fast fashion, your risk is fairly low. But so that's really sort of where ClearLoop sort of champions, is that it really has revolutionized the way that trades are settled and risk is flushed out constantly, 24/7, 365.
It's a slight non sequitur, but just to really contextualize how slow settlement can be for the viewers, I remember 2022 when they'd stopped, they were tapering QE and they were going to start doing QT. This might be 23, I can't remember. And I remember a guy at work had sent me, you can track the Federal Reserve's balance sheet, and it was still going up 2 months after they'd started QT, because the settlement on mortgage-backed securities could be like 60 days. Mm-hmm. So it's like, when we're talking about revolutionizing traditional finance, like you say, T+1 is considered great. And now you've got this technology which is auditable and can settle in seconds.
Yeah.
It feels, I don't know what you see in your seat, but it feels at this point almost inevitable that as BlackRock and I think, some of the exchanges like ICE or there's an Australian stock exchange, are all trialing this technology because it just seems better.
Yeah. And I guess, the how it works, or the how it works is great. But I guess from a use case perspective, right? If we're talking about a specific company that would implement this into strategy, what would that look like for them?
In terms of for ClearLoop,
without trying to sound like an ad placement.
So, I mean, it really would be utilized by sort of clients that have, an actively traded strategy. They're utilizing some form of centralized exchange, whether that be sort of purely spot trading for, going long on a certain strategy, or whether you're doing market neutral. The venues that are connected to ClearLoop kind of cover everything. We've got some of the top exchanges that cover 60% of the options flow, all the way down to the guys that are sort of doing quite niche pairings. So really it would be sort of any client that has an active strategy that's, they're actively trading it almost on a day-to-day basis. They're constantly having to hedge themselves. That's really sort of where they would specialize.
On the hedge funds, do you see any trends? It sounds like they're running similar strategies to TradFi, like market neutral, pod shop, millennium style stuff. Or is there, because it's a nascent market, is there a sort of strategies that you wouldn't find in normal markets?
I mean, you've got maybe the sort of more nuances, maybe the sort of the high frequency trading strategies. Again, they're relying quite greatly on the fact that the spreads can be tighter, they can get in and out of positions much faster because they're not constrained by the sort of slow settlement cycles or sort of being able to take stock loans from X, Y, and Z. So I would say that strategy is probably more prevalent in the crypto space than it may be in TradFi, but I don't think there would be one that springs to mind that's sort of an outlier.
Sure. So it's not just Gaz pumping a dog with hat or whatever you were telling me about earlier.
Dog with hat, it's great. It is a great one. You definitely got some, your sort of less kosher ideas. You got your front running traders, the bots, but that existed in any industry.
Yep.
And do you see, so sort of on a perhaps broader level, like what sort of sentiment and sort of trends are you seeing within the market at the moment?
Yeah, I mean, overall, it's sort of a relatively positive sentiment. Over the last sort of couple of weeks, or in fact the last week to date, we've seen some quite good rallies on Bitcoin and ETH. We have seen some people sort of pull out and take profit as we see the upward trajectory.
They've learned, I guess, or
quite. I mean, minimize your downfall. But the overall sentiment seems to be good. I mean, ETF flows are still heading in the right direction. Don't be wrong, there's a lot of sort of, I guess, uncertainty around the sort of political situation in the States, which I think will have a lot to answer for. And, but broadly speaking, the sentiment is sort of quite positive as a whole.
And Grayscale hasn't been too bad, so
yeah. All of the ETFs have done quite considerably well. I think Ethereum over the last week's done considerably well with 116 odd million inflow.
I saw it's the most successful. They're like the most successful launches of ETFs ever. I think in terms of AUM.
Yeah, it was. Yeah, I think most people have just kind of gone to build on their rails, right? Because there's a difference between Ethereum and ETH, right? Or because the difference between the token itself and then the actual rails. The rails itself for Ethereum, and then like the coin is like Ether or something.
Mm-hmm.
Yeah.
So I mean, Ethereum is the kind of foundation, and the token that is off the back of that is ETH, or the ticker.
From your seat, how important are institutions to the future of crypto? Can you sort of get to this, $500,000 $1 million Bitcoin without institutional adoption, or is that sort of mandatory?
I think it's hugely integral. A lot of we've seen what the ETF inflows have done to crypto more broadly, and that wouldn't be there without the institutional guys sort of jumping on it. Your BlackRocks, your Fidelity, your Van Eck, those guys. There's a reason why they've created the ETFs, and that primarily might be because it's a good upside, makes their investors happy, but equally there is, I imagine, quite a considerable amount of interest from the retail guys who equally want exposure to the upside, but don't either have the ability from a legal perspective to hold the assets, or don't have the know-how as to how to do it. And I don't think we would get to a point without those large institutional adoptions. There isn't going to be one single player that sort of ultimately takes the gold medal. I think to coin a rather cheesy phrase, it's sort of a rising tide lifts all ships. We're going to need sort of everybody to kind of get involved, get on board to sort of drive it to a wider adoption. Particularly, equally if you look at the on the sort of consumer banking side, again, I think that's got a lot to answer for. There are consumers that have an interest, of which the only way they're going to access it is through their institutional rails.
Yeah, I think there's in the private banking space has been some developments with, I think it was like Morgan Stanley in America now recommending it to clients. But if it feels to me like we're still a year or two off, but I sort of agree with you that there seems to be almost a sentiment sometimes that that's a bad thing, that the banks coming in is a bad thing. But realistically, it's a finite number of tokens, and the more people buying them, frankly, the more likely they are to go up in value.
I think the large institutions also sort of help drive the regulatory landscape, which has been sort of somewhat lacking across globe. And I know that obviously banks historically want to play by the correct rules, and they have been sort of lobbying from a regulatory perspective as to we need to build out the framework they want to operate within, the fines that they can do. Nobody wants to be caught too much in the grey or in the black, and so they definitely help drive the sort of more broad landscape and sort of building out the do's and the don'ts and the rule book.
Yeah. And I guess with that too, it's about the increase of consumer level and things of that nature. I mean, this is probably the institution as well, but a lot of times in the early crypto space, anonymity was this whole big thing that a lot of people were driving. But obviously, once institutionals and like regulations start coming on, that those seals KYC start rolling across. I mean, Bitstamp had a very strong one as well. How do you view, I guess, the rise of know your customer, or kind of this lack of anonymity into the crypto space now as we becomes more professionalized, so to speak?
Mm-hmm. I think it is a change for the better. I totally get the guys that were there, sort of wanting the pseudonymity aspect of crypto, and there are still a lot of firms that want that, and that's just purely because they don't want to, because it's so visible and so public, they don't want sort of trading activities to be so easily tracked. But the idea is that once you've got a wallet address and who's behind that, you can follow it indefinitely. Now the sort of difficulty, sort of where I see actually a benefit, is in that sort of KYC side. Right. So we are seeing much more trends towards what is in existence in TradFi. So a few of the regulatory bodies have come out with things like travel rule, which sort of roughly mimics what SWIFT is. Yep. So the idea that if we're sending dollars or pounds between each other, our banks know exactly who's behind each account. Okay. That's sort of being built out. Switzerland at the moment are the champion of travel rule. There are a few other jurisdictions that are following. But I think it's a good step in the right direction. That being said, as it already stood before sort of those aspects sort of kicked in and KYC was becoming more prevalent, it was only a very small fraction of the sort of transactions per month, per week that were actually being used for kind of illicit activities. Right. So, you could build a relatively strong case that is it necessary? No. But I don't think it's a bad thing overall.
No. I think that was my issue. My cold storage is fairly an anonymous, non-KYC thing. So, yeah.
So,
dubious.
So you send it to me.
There you go.
So you cover Europe, Middle East, and Africa.
Yeah.
Is there anything? So you mentioned what's going on with Switzerland, but is there anything else? I feel like I feel like I was reading something about happening in the Middle East about maybe mining and sort of surplus energy. Is there anything sort of going on there on a nation state level?
Yeah, I mean, there's quite a lot going on sort of worldwide, particularly in sort of South America. You've got Paraguay and Panama, who are sort of leveraging their natural resources, particularly on the sort of hydroelectric side of things, to basically try and entice miners who are more broadly well known for being quite energy intensive sort of users. Right. So they're really sort of leveraging what they have already and sort of building out the regulatory sort of landscape as such to invite those people in. We're seeing the same in the Middle East. They are maybe taking a slightly different approach, A, with the miners, yes, but B, just sort of trying to be the first country to sort of come out with a crypto-friendly jurisdiction and regulatory sort of framework.
Yeah. There's a few things there, I guess, from the sovereign point, but also obviously very highly energy intensive, right? Yeah. But now also there's limited energy stores we have. They're battling with AI now in terms of that capacity. I mean, Microsoft was about to buy 3 Mile Island, the nuclear reactors. So how do you see that battle kind of shaping up between the crypto guys needing their energy, the miners and the AI folk. I mean, I assume the AI folks have a bit more firepower in terms of a wallet size, but
I mean, definitely there is going to be a shift. I mean, we've already seen it with the likes of Ethereum, who moved from a proof of work concept.
Right.
Which
just
is
for the audience, what is let's do proof of work and proof of stake.
So proof of work is where you do have those miners. You've got those graphic cards, those servers that are basically computing mathematical and algorithmic problems, and it's a first race to the post.
Right.
Super energy intensive. That's what Bitcoin still sits on. Ethereum made a switch from that to proof of stake, where it is people that own assets that pledge them and act as the validators in that network. So they are kind of self-validating the transactions.
Right.
Now, because they're not sort of centralized on servers, there's much less energy utilized in that. Look, I think when you throw in and hopefully that summarizes that.
Perfect.
When you throw in sort of AI, I think we will see a shift, and I don't think AI is solely focused on crypto. There is definitely a crypto AI element for sure. I do think there is going to be a bit of a power struggle, pardon the pun. And I think that's why we're seeing those jurisdictions acknowledging that that's going to be a thing and coming up with quite intuitive and ways of combating that.
Are these countries, are they adopting Bitcoin in a El Salvador sense, actually buying it themselves? Are they creating miners to mine Bitcoin or whatever, or is it just a race in terms of legislature? So why not create a crypto friendly regulation and get the people over here and then just tax and make money that way?
That's definitely an approach. I think
approach. The approach?
I personally, perhaps. I mean, look, if you look at El Salvador, they sort of did a multi-prong approach. They not only accepted it and recognized it as legal tender, which is an interesting move from a sovereign, because you recognize that crypto has a value and an intrinsic value.
Yep.
They also went one step further and have tried to entice, alongside doing that, additional revenue by introducing miners into the country. I don't suspect we'll see legal tender being brought in anytime soon, but definitely on the miner side, which obviously has the off-back benefits of taxes and sort of other sort of more broad business of being sort of considered a crypto friendly, for sure.
I was just going to say on that, it's worth, for people that don't necessarily follow this space, it's quite a wild thing to think about that El Salvador, fine, small country, but I saw something the other day about how much debt they paid off because of it.
Really?
And a huge amount. The idea that a country in 2024 has said that they will recognize, basically a cryptographic currency that doesn't exist in any physical form as legal tender, and you can go to a bar and pay with a currency that they have no control over. It's a bit crazy.
But I mean, talking about the bar situation, I'm not sure if you guys saw, there's a video of Trump. He went to a Bitcoin bar in New York, and it looked like the worst process ever by which to buy a beer. It took 15 minutes. I know it's not usually the case, but yeah, I mean,
get him into a Solana bar and Trump wouldn't have had a problem.
There you go.
Looking ahead to the future in the crypto space, are there any innovations? You sort of touched on Solana. That seems to be increasingly popular. Any innovations that you're watching over the next sort of 5 to 10 years?
Yeah, I mean, the sort of real one at the moment is the latest buzzword is tokenization, and taking that one step further is tokenization of real world assets. I was at a conference recently with the keynote speaker being sort of quite strong at, quite high up at DTCC, which is the clearinghouse, one of the clearing bodies out in the US. Who have more just recently come out with a digital sandbox for basically crypto clearing. Okay. But that would leverage tokenization.
Is that, sorry, just to check, is that the idea that, I buy a house and I can put it on chain and sort of sell fractional ownership of the house, so you can
that could be a part of tokenization of real world assets. Where that's likely to be as a starting point is that you're able to use a real world asset as collateral or as margin to trade with. So you could hold a physical stock, effectively wrap that in some form of a sort of a crypto wrapper, represent that as a digital asset, a crypto asset, so like Ethereum, or and ultimately you could use that to then trade with on a crypto centralized exchange. That would kind of be its starting point. So we're seeing a lot of the institutional guys get their head around that. I mean, we're seeing tokenized money market funds or tokenized treasuries. Biddle being a perfect example.
I'm sorry. What's
I'm just
Biddle?
thinking. No, I'm just thinking of like, you know, the stereotypical joker, like, sorry, honey, I lost the car in a poker game. So, sorry, honey, I lost the house on trading crypto.
No.
So Biddle is
BIDDLE.
BIDL.
Oh, very tech.
Sorry, BUILD. Yeah,
Very tech. We just
fact
fact
check
things
that.
Crazy.
We love to come up with weird
nonsensical
questions.
ways. Yeah.
That is BlackRock and Securitizer's tokenized treasury fund.
Okay.
So they've gone into short-term treasuries to buy those. They've then created a token off the back of those. Now the token itself represents ownership within that fund, but it does have that token has a value.
Right.
Now the whole point of tokenization is you'd need multiple parties within the framework to represent that and understand that value. Right. Now, the hope is that we can get to a point that a centralized exchange, if you were to send that token, understand that there is a value and they can recall on that should they need. So suddenly you open up this whole world that whilst you're generating a yield from BlackRock's tokenized treasury fund, you're also being able to use it in an actively traded strategy. So that's kind of what we're focusing on, or what we're seeing as being the latest trend for the next couple of years.
So it's there's quite a lot going on, basically. So that's what I'm taking from this.
And
Doesn't sleep.
Looking forward, right? We had briefly spoken about, sometimes VCs with particularly large AUMs, they'll go about hedging risks on foreign exchanges, especially if they're investing in emerging markets. You don't want to hold, a dollar in a peso, right? If you don't have to. I guess, looking forward, you mentioned that there's nothing in that sense happening now, but looking forward, do you see a case where, these, effectively some of these large VCs are institutions in their own right, hedging using crypto in the future?
Yeah,
and what might that look like as well?
I mean, absolutely. I mean, that I wouldn't be too surprised. I mean, I know VCs are currently hedging themselves on the sort of speculative crypto assets that they hold if they're going and being VCs on sort of crypto projects. If you're sort of more broadly speaking on the sort of currency side, that equally can be done on sort of through likes of stable coins. So stable coin, for those who don't understand, is a coin that is pegged to a fiat currency. So the most common one would be sort of USDT, which is Tether, which is pegged 1-to-1 with the dollar. One token.
I have
$1.
a question about Tether after this exercise.
Oh, here we go.
I've gone down
corner.
a bad corner. And so, there could be a case that VCs could hedge themselves fiat-wise using a digital currency that is ultimately backed by a fiat currency.
But you don't need to hedge. Do you know why, Ken?
Why is that?
Because one Bitcoin is one Bitcoin.
Unless you have 0.32 Bitcoin.
Had.
I guess, on that, you're talking stable coins and things of that nature. Tether, I mean, they made some waves a few years ago, I guess, right? I mean, people weren't sure about if this was a real thing, or like they really didn't have as much money as they thought. People were looking into the financials in some cases. What are you, purely speculation, this isn't any statement of fact, but like, what's your opinion on Tether and the journey that it's been through?
I mean, most profitable business in the world. And so I take my hats off to them for that. That they did very well to proposition themselves as sort of the leader in a stablecoin, as a stablecoin issuer. Find me a company that hasn't gone through sort of their ups and their downs. They're still very much prevalent in the industry, and so I sort of won't cast too much judgment as to how they've got to that point. But it's still being widely utilized by centralized exchanges and sort of everybody in the crypto space.
They pulled a bit of a sneaky at the beginning, I reckon. But they seem to have got away with it. So
it's only a crime if you get caught. Shout out to the Tether guys.
To be fair, this one's interesting because I actually don't know if it's like a valid concern. I don't know if we ever will know, but it does. I feel like, you know when you're at work and people come with you with things that you know aren't a concern,
Yeah.
but you can't really find a way. Like I get it all the time. People are like, but if I give my money to you, why are you not just going to steal it from the bank? And it's like, I can't. I don't know how to explain it. I just can't. Like
It's
I feel like this is like you every day with Tether.
Yeah.
Some like 80-year-old CIO who's probably worth 500 million is like, but you're going to steal my bitcoins. It's like,
well, that's also a good like point. Maybe not a good topic, but yeah. I mean, in terms of the Tether thing, I thought it was always a crackpot conspiracy type of thing. But I guess we will never know. But you outside of folks like Sam Bankman-Fried and FTX, like what does it look like with exchanges having the security issues, they get hacked, and then people lose their stuff. How are you viewing that? Because obviously you guys are custodians of this. You guys have your own security. How do you guys view, security and the kind of potential breaks and hacks that could occur?
can I think I know the answer to this. Just it's very clear.
Welcome to the merges with our guest, Rory Mason.
Yeah. Well, I know what you're saying, but we don't have to put this in. But through ClearLoop, the whole point is that you don't leave them on exchanges, so they can't get hacked. You take it off exchange almost immediately and put it in a trust.
It never exists on the centralized exchanges to start with. So
No, but I mean,
Should have done your research,
it's
buddy.
a very
well, maybe that's why the guests are listening, so they can learn, because they haven't done the research because they're not here with us, are they?
it's a really good question, and I'll break it down to sort of, I guess, the personal aspect and then the sort of institutional side. Personally, I wouldn't keep my assets on an exchange.
Cold
There's
storage.
There's the good old phrase, not your keys, not your crypto. And for simplicity's sake, the idea of a notion of that is if you don't have the keys to a front door, you're not going to be able to get through the front door. And if somebody else has the keys, well, anything behind the door is kind of up for fair game, right?
Right.
Same notion with crypto. So personally, never keep anything on a centralized exchange. And the way that then translates to institutions is that the way that our custody offering is set up is that we have a 2 out of 3 consensus. What that means is that 2 parties have to sign off on every asset movement. Now, day to day, that is Copper and the client. Each custodian has a slightly different nuance of that setup, but it's broadly the same. It's that no single party has the ability to move assets. The client naturally does have the sort of controlling share in that. In the Copper setup, we have what's known as a trusted third party. It's somebody that sits external, that is legally, there's a wrapper that the client can go and ask for their kind of share of the key. So again, we've completely mitigated the risk of that idea that crypto can sort of vanish into thin air.
Have you also tokenized this hypothetical key as well?
Not yet. Not yet. I'm still trying to wait for people to realize its value.
There you go.
Yeah.
My favorite product I saw on Amazon the other day was you could give someone your seed phrase, which is your password, right? And they print it on metal plates and send it to you, which I really like, apart from the fact you're giving someone your seed phrase.
Yeah.
It seems very silly, but
Yeah, there's quite a few of those. There's ones that you have to slide in different letters and numbers and basically rebuild your seed phrase.
Oh, really?
And the idea is that because it's metal, unlike paper, it's not going to burn. But I'm not sure I'd trust that myself.
some service from Gaz.
Here you go. Question service with Gaz.
Welcome back to
So
another
tell me
segment.
about why should I put my money in? Was it dog with hat?
Dog with hat.
Yeah. Why should? Well, I think the question might be why shouldn't you?
Why shouldn't I?
Yeah.
Because I don't have any money.
Gaz pumps our bags.
I'm spending it all on a Rolex. That's what I'm spending my money.
Oh my god.
Oh,
this-
wait,
this
have you decided
conversation.
Which one?
You're not having the hair treatment?
No, so I decided Rolex is a better investment.
He like
than a hair
he needs to
transplant.
he's deciding whether to do a Rolex or get a hair transplant.
I love that.
Right? I think I've got a few more years on the hair transplant, but the Rolex is immediate.
Charlie, I want to move on to your career and how you got into crypto. But before, one other thing I want to cover is Avalanche, which is it's a layer 1. Recently launched a game called Off the Grid. And I thought maybe you could explain, because I've been trying to understand it, why that's so important and what having sort of, your gun or your skin on chain actually means for the future of gaming.
Yeah. So in Avalanche, the sort of backstory behind that was we spoke about that many moons ago.
Yeah.
And it was a strong sentiment that things were going to take off. But as you're absolutely right, they recently released Off Grid, which was kind of one of the first blockchain-based games to kind of go mainstream. Launched on PS5 or 6, I can never remember which one's the latest one, and Xbox, but basically got live on sort of a huge platform. Really just paves the way for the starting point for blockchain-based games. Now the benefit, kind of the nuances there, as Rory, as you mentioned, with the skin and the sort of the gun, follows, what guys are already familiar with and girls alike, with, the idea of paying for upgrades in games. But this time it's blockchain based. You have this sort of history of, at one point you did own X gun, but that was then got transferred onto X user. Sort of almost becoming a little bit more of a collector's sort of notion, sort of NFTs, non-fungible tokens, involved in gaming.
That was a fun time.
Yeah.
So does that mean there's going to be like a premium? So if you play Off the Grid and Sam Bankman-Fried's gun goes on sale, people will be like, I want the gun.
There is a potential. There could be some pretty cool sort of nuances and niche things that come to those games. I think we'll sort of have to see it a little bit too early to tell. But it's a great sort of game changer for Avalanche because they're the first one to bring something to market. And so we'll see who joins the list next.
I remember it got a lot of news recently, so it seems like it's actually been quite an important stepping stone for the industry. We always do a sort of like career journey and advice for like the up and comers. You obviously went from insurance into digital assets and got yourself into one of the best sort of companies in that space. Do you want to maybe explain how you made that transition, and did you sort of fall into it, or was it sort of planned?
Yeah, it was very much falling into, but it was through the sort of insurance broking world that I was in. So I joined that straight out of uni, did that for a number of years, which was eye-opening and a really good sort of starting point for understanding what sort of culture did I enjoy and like. It was through that I met a colleague, then became a colleague at the time, who was approached and sort of moved into the crypto space. They moved, a considerable amount of time before I made the jump. And I was always fascinated with their journey of joining a startup that was doing something that I, quite frankly, and perfectly honestly, had no idea what was doing at the time. The idea of Bitcoin, I'm not quite sure I knew what that was at the time. And so when the sort of gentleman gave me a tap and said, I think it's time that you come and do something a little bit more interesting, I thought, you know what? I'll make the leap of faith. I'll make the jump. Needless to say, my poor parents thought I was completely losing the plot. You're moving away from a traditional, well-established business. But that was, so it was purely by chance. And really it was a huge leap of faith because it wasn't something that I was familiar with or knew much about.
And has there been like a difference in managing traditional relationships to crypto relationships?
Hugely. I mean, as mentioned, the sort of the client base or the people involved in the industry is quite mixed. You've got your crypto native guys who are absolute whiz kids, know everything about every single crypto asset there is about, and then you've got the guys who have purely been sort of dragged into the crypto space purely because they've had somebody that's told them that crypto is something they need to be involved in. And so, particularly with the crypto native guys, they don't really follow any sort of normal sort of structure. They tend to be quite agile as businesses. So when I've come from the insurance broking world, which is there are set processes, you go and write a policy. It has to go through underwriting. Crypto doesn't follow that same rule book, and so I was finding that a lot of the decisions were being made off the back of those a lot quicker. Yeah. So it's a lot more sort of fast paced, but it does take a certain adjustment to dealing with the people that are on both sides of those.
Do you have any advice for anyone who's maybe at university and thinking they want to get into the crypto space?
Yeah. I think, do your research, and I don't mean you need to become the absolute. You don't need to come up with your own layer 1 blockchain, but have a look at what's going on in the space. I think we can say that that's the same for any industry, is learn what's going on. Second thing is assess your skill set. What are you good at? Do you have an interest in understanding technical problems? Crypto can be very technical if you want it to be. You can really get down into the weeds of blockchain nodes, and I won't go into too many technicalities, but you really can drill down into quite a lot of technical detail. But if you're more salesy, well, crypto is also a perfect place. So I think honing in as to whether or not crypto fits what your interests are is a starting point. As mentioned, a lot of the crypto businesses come out with daily or even weekly newsletters. That's a great starting point for people to kind of figure out what's going on in the market.
And any sort of advice, not just on the sort of understanding of the market, but either in applying or just handling perhaps like the personal anxieties, like you say, of jumping from a very safe and steady job in insurance to a niche industry?
I think that has become a little bit easier as the years have gone on, because I think people now have the option of going to a well-established firm in the space, or ones that are new and up and coming. So you still have that ability to go for well-established or startup vibes. I personally thrive off the sort of start-off-esque, but I've learned to love the growth aspect of it. But equally, there are, as we talked about earlier, there are traditional finance companies that have been around for hundreds of years that are now doing crypto. So you can kind of get that comfort. So I think it would really come down to which environment do you enjoy most and which one do you thrive in? Do you want to be fast-paced and agile and have multiple hats, or do you want to be sort of somewhat regimented on your processes? I think based off that, you then either go for one of the two sort of buckets of companies.
That was my journey exactly. HSBC, I hated it. Then I went for the smallest startup I could find.
Yeah. Well, I think, to be fair, I think part of this is like you don't really know until you try both.
Yeah.
And in terms of skill sets to be successful in a career in crypto, like you say, you've got the sales and the technical understanding, but what else would you sort of recommend?
Yeah. I think when you drill down into the details, sort of having a really good eye for detail and sort of be very detail orientated is crucial. We're dealing, people can be dealing with quite considerable sizes of numbers, and a lot of it can sort of fall foul of sort of minor errors. So having a key eye for detail is hugely important, as it is for any industry, but I'd say crypto more so, because the sort of potential for things to go wrong is much greater.
Is that just because if you fat finger a trade, it's gone through?
Yeah. Because the speed of which things happen is obviously a lot quicker, that there aren't necessarily those sort of time buffers where you could step in front of a trade and sort of rebook the settlement. There's of course, all businesses have built in fail safes to prevent that from happening. But of course, for one's success, you don't want to be the person that's forever making mistakes.
Yeah.
And so having a starting point of being keen eye for detail puts you in a good stead for being successful in the business.
So we're going to wrap up with a bit of a lightning round, just because basically when I told people I had someone from a crypto company coming on, they were all telling me for price predictions. So
is that right?
That's right.
How many voices in your head were saying that? Or?
Bro, I'm over-levered. I need this thing to go up. So yeah, let's start with price target for this cycle, if you're willing to put your neck on the line.
I am willing to put my neck on the line.
Wow.
I comfortably see it being 125 by the end of this year.
Bitcoin.
Wow.
Yeah.
Fair enough.
Jeez.
Yeah.
I've seen more of the punchy thumbnail YouTube video talking about 100K for the end of the year. But I mean, I guess we are overdue for that kind of hype cycle, right?
Yeah. Yeah, it's long overdue. I mean, kind of all the indicators are kind of pointing towards that. Plus, it's kind of a good political, landscape at the moment. With the US election, if October goes well, we could be in good stead for hitting that.
Okay.
I dread to think what is going to come my way if I am so vastly off that.
$125.
Yeah, it's not financial advice.
Yeah, the entire, I think, social media and sort of podcast industry lives behind those 3 words.
Yeah.
No, that's fine. And then any views, I suppose, for 2025 should still be some positive momentum going into that year.
Yeah, I think there'll be some huge positive momentum. We'll have come out of the back of hopefully a pretty good end of 2024. I think a lot of businesses have some new products sort of that are cooking. You've got some of the larger guys, DRW and Cumberland, who are sort of and Flow Traders, who are working on some cool offerings. Not proprietary information; it's all available on Google. But if they can, they will have sort of targeted release for 2025. We should be seeking some more regulatory clarity in that period from kind of almost all jurisdictions. So hopefully, it should be a good year, all things considered. I've just got my eye focused on a couple of the sort of cooler crypto projects that should be already kicked off, but are looking to do some more stuff in the new year.
One trend to watch this cycle.
Political meme coins.
Really?
Yeah. And I'd maybe scope that out to just meme coins in general, particularly dog if hat,
Dog with hat.
Dog with
yeah.
hat.
I see that being quite a fad.
Let's be real though. Biden he's not going to be launching a meme coin, right? Well, I suppose
But he wouldn't be someone launching it though, right?
Yeah, can you imagine?
Trump has his own NFTs that he's been releasing.
Yeah,
I wouldn't be surprised if there's like a coin that his team has built behind somewhere. But I mean, for what it's worth, you sent me the poly market stuff, right? He would say, "Oh, you watch the poly market and try to break the market." I think that is the worst indicator about what the sentiment is for the market. I mean, you're talking about crypto gamblers, right?
Bothered you with my
I'm not saying I'm not saying it's bothering me, but I'm just saying these are effectively crypto gamblers, right? Mm-hmm. What side do you think they're really gonna? Who's their guy?
Oh, so it's a huge sampling bias.
Oh yeah, 100%, yeah.
Just a load of crypto guys. It's but
so
how many 50-year-old Democrats, out in Colorado own crypto?
This isn't financial advice, but if you see Trump hawking a coin, my God, I'd buy.
Yeah.
Yeah. Alongside dog with hat.
Yeah. Trump with hat.
Trump with hat. Next question, and I caveat this as someone who got drunk on Saturday night and spent £100 on Soft War. A book or resource for those learning crypto?
Layers of Money. Fantastic book that kind of covers a lot of things from traditional finance and then scopes all the way through to blockchain and the idea of distributed ledger technology, which is kind of what underpins blockchain. Very good book. Well worth a read.
I'll give that a go. Someone told me to buy it. I don't know if you guys have you seen the software thing that's gone on? So some MIT professor and director of military intelligence or something in the US wrote a big thesis, and it got basically recently I guess banned. The books got banned. They're not allowed to print anymore while it's investigated by the Department of Defense. So a mate messaged me at midnight and he was like, buy this now, it's it's being banned, it's going to go up in price. And then when I woke up Sunday morning, I found out you can just get a PDF online. Absolutely shafted.
I love the fact it'll go up in price versus clearly there's some knowledge in there that might be able to get you something versus we're going to sell the book again.
Favorite moment in crypto so far?
From a personal entertainment perspective, it has to be in watching Ryan Salami, the ex-COO of FTX, changing his LinkedIn profile to inmate as he went to go and serve his time. But on a more serious note,
thank you for your service.
Yeah. More serious note, I think it was seeing kind of the ETFs come over the line and sort of see that those were successful inflows, because that I think really paved the way for kind of the rest of the industry.
This, I don't know if you'll be allowed to answer, even if you knew, but next nation or company to adopt Bitcoin on its balance sheet?
Again, it's not sort of just done through research. There's a business out in Japan who is looking to basically copy a MicroStrategy strategy. So it'll be interesting to see sort of how that pans out.
Trying to exit the 80s. Love it.
And then in terms of sort of, did you say nation state?
Yes.
Now that is a very difficult one.
Where are you seeing the most traction?
I would probably say Panama is probably going to be a front runner in adding it as legal tender.
Biggest learning since joining Copper?
No 2 days are ever the same. Be agile, have your wits about you, and not everything is personal.
Okay.
It's just business.
It
Monkey
is.
business.
If you want a
sometimes.
friend, get a dog.
Ooh, that's cutthroat, baby.
God, we should introduce him to Hector.
Wait, what was it like?
Is Hector the dog or?
He's the hat.
Yeah.
Hector was like, I've shaken hands with many disagreeable people, but I'm gonna do what I need to do to get what I want. I was like,
Yeah, it's like I've heard a few stories of people stabbing their workmates like straight in the back, and he goes, "They're not friends, they're colleagues." And I was like, "Whoa!" Final one. Any regrets since leaving TradFi?
Probably the sort of quite mandated business hours. Crypto is obviously a 24/7 industry. It never sleeps, and despite companies' best efforts of having teams all around the globe, there will always be instances where you get phone calls. So I think that's maybe not a regret, but a miss is knowing that it's very clean cut 9 to 5. As soon as you leave your desk, that's it until the morning.
Yeah, so no 3 a.m. dramas in the insurance world, basically.
No, there definitely weren't. No, not unless there was a claim, but even then, that wasn't really my responsibility either. So,
you're a crypto guy, right? Mm-hmm. WhatsApp or Telegram?
Telegram.
Well, could have probably guessed that one, but we gotta be sure. There's a institutional aspect. You have some bit ropey folks on.
No, I mean we're seeing a lot of institutional sort of adoption into Ton, which Ton work very closely with the Telegram Foundation or Telegram Group. I think there's quite a strong use case of basically having a payment token that you can utilize through a chat app.
The Telegram founder got arrested, didn't he?
Yeah. Correct, yeah, and then subsequently released.
Okay.
I know they released him already.
I think so.
Hope so.
We might need to fact check.
He just refused to give up people's data, right?
Yeah.
Was the thing. Yeah.
A true hero.
Right, we'll wrap it up there. Charlie, thank you for coming on. Thanks for explaining it. Actually really enjoyed it. I find it really interesting, and I think it's quite obvious that this is where the industry's going. It's just perhaps the path there is a little unknown.
Yeah. No, well, thank you very much both for having me. It's been a lot of fun.
Where can people find you, I should say?
You can find me on LinkedIn.
Yep, brilliant. And then next episode, Ken, do you want to tease?
Yeah, I got a member of the mergers community and a good friend. Actually, the guy I met on my first day in VC. Actually, his first day as well, I think. But we'll let him tell that, I guess.
Okay, brilliant. Well, thanks very much, and see you next week.